You're listening to the Perth Property Show, Australia's only weekly property podcast by West Australian experts for West Australian listeners. Catch your latest episode every Monday at 7 a.m.
Welcome to our first anniversary episode of the Perth Property Show. It is the 2nd of December 2019. Super excited and proud to say that we've just passed our 52nd episode. This is episode 53. We've gotten through probably the toughest year in property that I've been alive for. If you listen back to our first episode, which was titled Is Perth on the Way Up, we might have to call that Is Perth on the Way Up Stage 2 or Version 2. We have one man that could be a part of this episode that can be the feature and star of this episode. It is a 100% focus on the Perth market update. You know who this man is. It's Brendon Ptolomey. Thank you very much. And thank you again for the support you've had for the program since it started.
Cheers, Trent. G'day. Thanks for having me on. It's fantastic to be here in the 1 year anniversary. I can't believe it's a year.
Who would have thought? I mean, I'm not sure what the stats are on podcasts in general that last this long, but hopefully we're 10 years down the track in 2029 and having the same conversation of holy moly, we just did 10 years and we've had a cycle and a half. And
yeah,
we've seen the last sort of upswing and downswing probably as everything goes up, everything goes down. Let's make sure that we have a bit of a time capsule and think about that, right?
Absolutely, because if you're listening to this, you always need to remember that property is a long-term game. And I think that through our down cycle, it's been really easy for people to start to think of it as a short-term game. And when you look at Perth over a long period of time, this is probably the biggest down cycle that we've ever had. So it's really good to remember that if you go in for the long game, you know, a 10-year time frame is a really good time frame on property in the Perth marketplace.
Well, especially with transactional costs, when you think about the long-term heavy investment that goes into a suburb and a city that eventually affects prices, you look at the East Coast and anything that moves. I can't believe right now that we're talking about the East Coast not being in a serious downturn. Hoping it's only credit fueled and the rest of the fundamentals are still making sense, and some point I'll be a bit more accurate with it. But you think about the East Coast and you think about the FOMO involved. I feel less risky in Perth right now. I feel more comfortable buying in Perth right now.
Yeah, one of the things I think that we'd probably have talked about over the last year, and certainly at the start of last year was, or this year, sorry, was the East Coast people coming to our market. We certainly thought that there would be more money coming from the East Coast into Perth this year. That certainly didn't eventuate as much as we thought it would, basically because they got refocused on their own marketplace, interest rates in their own marketplace, obviously money being really cheap, and then the FOMO kicked in, as you just mentioned. Big headlines in the last few weeks about FOMO because their auction clearance rate has gone through 70% and is on its way to 80%, which is just unbelievable. And a lack of stock there as well, which is helping that FOMO. Yeah.
If I wasn't nervous 6 months ago for that market, I'm nervous now. And
absolutely.
It just seems like the fundamentals have all fallen away now. It's just a whole bunch of everyone who thought they'd missed out a year ago or a year and a half ago going, oh, I can get in now before it's too late.
Yep. And interestingly, we have seen a couple of these bounces in our marketplace in the past.
Tell us about that, a bit of a history.
Yeah, so about 3 years ago, we had a little bit of dead cat bounce. So we had the market dropping off everywhere in Perth. And then we just had these pockets. I remember South Perth Como had this little recovery quickly while everyone went, hang on, that's cheap long term for that location. I'll go jump back in there and buy something. And suddenly the stock gets cleared out and values go back up again. We're still seeing a lot of that around Perth at the moment, a real patchy market where some suburbs get a number of listings over a short period of time. They get cleaned up because people come through and say, hey, look, this is a nice place to live. Yeah. And then we see the prices rise on the back of that, a little bit of that mini FOMO happening in a suburb. And then we go back to a more normal market cycle there, as in everyone calms down. The stock that was on the market gets cleaned out. There's not so many more properties coming to the same market in that suburb, and then values level out slightly after that. Yeah,
isn't it interesting how we have these tiny isolated pockets where we live every day in these suburbs, these pockets. We feel the vibe around, especially if we're looking for property at the time, and they can affect those small recoveries in little pockets in Perth. But at the end of the day, after that 2-3 month cycle, it will always be the broader city-based fundamentals that will be either pushing a state forward or holding it back, which is why we've seen so many false starts in Perth around town and in the southwest. all these different
absolutely.
places.
And from our point of view as valuers, having a look at some of these areas where we literally have a valuer walk back into the office and say, hey, look, something's happening in this suburb. It's getting cleaned out a little bit. There's a little bit of value growth there. I think it's going to bounce a little bit.
Well, the value is just as excited
again.
about as the rest of us,
Yeah,
right?
yeah, absolutely.
We all love property.
Yeah.
As arm's length as you want to be as a valuer, you still look at it and go, guys, look what's going on.
Yeah, absolutely. Yeah. So, and we've had those blips. I think we've talked about a couple in the past. We had some stats there when we saw suburbs like, from recollection over the last year or so, we had Duncraig jump out at one point in time, had Atwell jump out at another point in time. We had obviously the Dalkeith Nedlands clean up and clear out where there was an excess of stock in there and suddenly everyone came through and cleaned that up.
Yeah, including me.
Yes, yeah. And so interestingly, we're just seeing the next bounce of that with the rezonings happening through that area. So saw a lot of standoff, a lot of everybody standing in the street almost looking at what was going to happen while we were waiting for the zonings to get approved. As soon as they got approved, we've seen a whole lot of transactions come through there in the last 2 or 3 months. Yeah.
Let's go around town, I guess. Let's start talking about some stats. I guess we'll continue to have lots of little anecdotes. One of my favourite real estate agents to come in, he's been in a few times now, is Devon Kelly. I think I spoke to you about this over the phone when we were chatting last week. He has anecdotally said over the podcast and personally to me that his volumes are essentially doubled in the last quarter to what they were for the last year before that.
Yep.
Can you explain, is that exactly what you were just talking about before? We haven't really seen massive price rises.
No.
But transactions in a suburb where most of us would realise, Cloverdale, Belmont, Rivervale, they have been smashed over the last few years. What brings people to market, I guess, for the spring season?
Yeah, it's really interesting which fundamentals start driving people first. I think that what's happened over this spring season is all of the promotion and all of the front page news and the politicking around cheap interest rates has finally hit home, and people have realised that this is the cheapest money's going to get. There's probably another 0.25% down to go in terms of interest rates. So why wouldn't I go and spend the money now? Because that's a long-term trend now. In the next few years at least, my interest rates are going to be at this level. And so there's one motivating factor to go, okay, I'll go jump back in the market. Then, as you said, you've got the idea of, I've been watching this market for a while. I remember when the house down the road on the corner, the development side in the case of City of Belmont, was selling at $900,000. That's now corrected significantly, and I can see that that's cheap. So I've got cheap money, I've got a cheap listing price, and
hoarding up my money.
Yeah, hopefully paying down. Everyone should have been paying off their mortgages as fast as they can.
Missed opportunity if you're not.
Yeah, absolutely. Yeah, that's definitely should have been the focus over the last couple of years, and should still be the focus, obviously. Yeah. Get rid of that mortgage while the interest rates are so low, and then that then starts motivating people to take some action. I think the other final piece of the puzzle there is to see it is a little bit of FOMO, so they do want to see other people go and buy something because that gives you the self-belief that the market probably has changed slightly. So they'll see another property sell, might be the one we just talked about down the road on the corner, and they think, hang on, I've been looking at this for a little while, and this is the cheapest that I've seen it. So I better start having a look around. And the other one there, we're talking development sites there. The other one there might just be the upgrade buyer. So I'm in the house down the road with 3 bedrooms, 1 bathroom. I love the area. I want to upgrade to something newer. The kids are in the same school. I just want to move around the corner and basically be in the same area, but I don't want to renovate my house. I want something newer, and I'll go and do the upgrade buy within generally the same location. Yeah.
Well, the assessment rates came down at the start of July, August, essentially. Yep. So you'd expect 2-3 months from now, people starting to have those conversations around the dinner table to talk to their broker, their bank, and understand in real terms, actually, now I can afford this.
Yeah. So what we've been seeing in the marketplace just in the last couple of months is probably a little bit of that pent-up demand coming through. So people like Devon that are really busy are potentially busy because the people that went to look to buy within the last 18 months to 2 years.
Around the election.
Yeah, most likely didn't get finance approval because of the HEMS type assessments that were the headline around that point in time. And generally what we found was those people were the people that would usually get approved. We had bankers and brokers talking to us about their individual customer situations where they knew that person would have gotten approval in the past, and under the new assessment of their expenses and their income side of the equation, they weren't getting approved from the bank. So those people put the queue in the rack, got maybe a little bit disconsolate about whether they were going to do the upgrade buy or buy the development site or buy the extra investment property. And now what we're seeing is probably the brokers and the bankers knocking on their door again. Hey, look, things have
Reminding them.
changed.
Yep.
Money's available again. There's some more liquidity in the marketplace. So why don't you have a look around and maybe let's reassess your position? Yeah.
Yeah. On the settlement side, for example, in our settlements business at Strategic, we can't make business happen. It's really just a share of how big that pie is. And the stats on our side are we've never had in the last 4 weeks, our volumes have pretty much been double.
Yep.
Since the rest of the year. Now, is that a little bit of marketing? Is that, more business referrals? Possibly some of that.
Yep.
But you just don't double over the space
No,
without something happening structurally in the market. And that's just a reflection of transactions. So do you have any stats or information on how the transaction volume has been looking over the spring season? Seasonally, obviously, spring's always a bit better than any other time, but...
Yeah. Well, interestingly, the stat that stood out to us was the listing stat on the way into spring, because listings went from 15,500 listings, according to REWA, down to 13,800. And they hit that bottom and then bounced back up. So there are a few different factors going on there. A little bit of the relaunch, I'll take it off the market and then bring it back. There's also a little bit of stock being soaked up really quickly on the way into spring. So people jumping first and going, I'll get in. And then a little bit of rental market activity as well, as in people taking a house that they thought that they might sell, taking that off the market and renting it. And certainly we heard some stories from agents around baby boomers. Always nice to victimise the baby boomers, but essentially as property starts to look like a better investment and rentals levelling out and potentially bouncing up slightly, suddenly property's looking much better than 1.75% in the bank for a term deposit. If you can get 4 or 5% yield on your rental property, obviously we've already talked about interest rates being cheap, so people have decided, hang on, I'll take that off the market and keep it because I can rent it and get an income from it again.
And there's that supply factor being affected.
Yep, drying up that supply, and then that obviously starts to put some pressure on prices in some locations. Yeah.
Well, that was exactly what I was reporting on Channel 9 a week and a half ago. The stats that came out from CoreLogic recently, they're pretty straightforward. It's not hard to understand. Perth gross rental yield is at 4.3%.
Yep.
Our 5-year and 3-year mortgage rates are in the low 3s.
Yep.
If you're buying a property today with the purpose of investment and it's not positively geared, you've not bought a good investment.
Yeah. Yep.
Yep. It's that straightforward right now. And that's a phenomenon that has never existed in Perth's recorded data history.
Yes. And the other exciting part about that is the REWA stats are saying that rents have bottomed out and they're moving upwards again. So
vacancy rates are still going down.
Yeah. Vacancy rate's gone down. It's at 2.7% off a high of it pretty much hit 6%. So it's more than halved. And so then again, that puts that pressure on rental rates as well. And, this then coupled with what we're going to get to and talk about some of the suburbs that are probably the cheapest they're ever going to be. I think that we probably said that in the podcast 12 months ago.
Yeah, exactly.
And we were sitting here bullish about going into a market still declining. Really what we're thinking about now is when do you jump in? So there's some really decent suburbs, and I hate to have to go back to what we were talking about before, but it's a good point of reference. And in the past, we've talked about...
If it was a good idea a year ago, it's still a good idea today.
Yeah.
Perth, if anyone can explain Perth in last year, it's done nothing.
Yeah.
We haven't built anything. We haven't lost anything. Everyone's sort of just been sitting around watching Bill Shorten make a fool of himself and the Royal Banking Commission come and go.
Yeah.
Really, we should just probably press pause right now and continue with a recording of what we did a year ago.
Yeah. Well, so I found some stats to give us some excitement. We would have talked about Baldivis a year ago. So, big suburb. So it gets victimised on the statistics
by me as well.
It is absolutely massive when you compare it to lots of other suburbs around. So therefore it has a lot of supply. But what we're seeing now, compared to a couple of years ago, in August 2017, we did a snapshot of Baldivis. There was 650 odd properties on the market. Bearing in mind this is some of the marketing house and land packages in there and stuff like that as well. September 18, that had dropped to 590, and September 19, that's down to 500. So you can see that stock slowly and the supply there slowly ebbing away. It is still a massive number. It is still pretty much 2 years worth of supply for that location.
When you compare it to under offer numbers, it's still pretty poor, isn't it?
Yeah, so only about 8% of that.
Yeah, see, that's still like pathetic.
Is under offer. Yeah. As opposed to some of the other suburbs.
I was expecting you to tell me to lighten up on
Baldivis.
Baldivis.
Yeah, look, I think...
We need it, though. If this market as an average is going to recover as a median, it needs to come from the bottom.
Yeah, absolutely. And so there's still a really decent argument to be had here. If you're going to buy an investment property, there's a whole lot of supply down there. It's still a very rentable location. Go and talk to the people that live in Baldivis. It's a nice place to live.
Yeah.
There's a really good schools there, great shopping centre, decent infrastructure, some nice parks and that kind of stuff. Easy to get to the freeway and easy to get down to Rockingham towards the beach as well. So it's not a bad location by any stretch of the imagination. It's just been oversupplied, and it is one name that covers a really large geographical area.
Probably what will end up being a couple of suburbs, right?
Absolutely, yeah. And so my suggestion would be, if you're an investor or you're a first home buyer, you go and pick the eyes. That's your opportunity. Pick the eyes out of that suburb to find either the bargain basement property, which probably needs some work because there's a few mortgagee in possession properties and some uncared for properties there. So if you're buying the cheapest property, it probably needs some work, and you might have the ability to do that. Or you go and buy the one that's in the best condition and ready to be rented out or lived in by yourself. And I think what you'll find is, certainly as a first home buyer and as an investor, that it's cheaper than the house and land package down the road.
Hey, Gavin Hegney was talking a couple of weeks ago at an event that I was attending, and one of the really interesting pieces of information he pulled out for that night was the Aspen Group's purchase.
Yep.
$20 million of just run-of-the-mill, mortgagee in possession style properties that you wouldn't want to be living in yourself without a good lick of paint.
Yep.
They just picked up, sounds like about 70 of them.
Yep.
This is a big fund, $20 million they just spent on passive investments in Perth. That's quite interesting. You think about what it would take to approve a decision like that.
Yep.
Not to get into apartments, not to get into developments, but to just buy underpriced mortgagee in possession properties around the Rockingham area, Baldivis, etc. Pretty interesting to see a company like that come in and say now's the time to spend that money.
Absolutely, and maybe it's a good lead indicator. It's really interesting to consider that against some of the build to rent stuff, the complexes that we've had in Subiaco. What it is indicating is that there's money looking for places to be located in terms of trying to get a return, and they're obviously sitting back saying it's worth putting that amount of money into residential property in Perth because, number one, capital values are probably the lowest they'll be in a long period of time, and number two, I can pull a 4 or 5% gross yield out of it, and that's much better than I'm going to get out of maybe another.
Well, they reckon they're going to get
investment.
7%. Isn't that interesting?
It is interesting.
When you think about when you're buying it that cheap, maybe they're doing a bit of a quick reno, upgrade the floors and get it going. When you think about 7% as a fund, compare it to 1% in the deposit rates, it's not bad.
Yeah, absolutely.
And then you've got hopeful capital growth in the future.
Yeah, and so maybe they are building some capital growth into that 7%. But obviously there's the way that the Perth market cycle has gone in the past, you would expect to be able to get some capital growth in that fund for sure. Yep.
What else you got for us?
Some of the other stats that we looked at around Perth Metro, there was a good one that we found in terms of researching Cottesloe, and I hate to kind of highlight suburbs that not all of us can afford to live in, but it was an example of where you can see why you would invest in property in Perth for a long period of time. So 2 sales in a prime street. I won't name the street just for privacy reasons, but people can find this data. It's available at the Valuer General's office.
It will be available in RP data.
CoreLogic and that kind of stuff. Essentially, 2 sales that so one purchased in December 1994. Ocean views these houses and lots. So one street back from the beach, purchased in 94 for $615,000, resold in August last year at $4.5 million. That's a 26% average annual increase on your house that you might be living in Cottesloe. And then 2 doors down, similar situation. So purchased in 97, interestingly, 3 years later for not a dissimilar property or block, for $880,000, so already a couple $100,000 different to the one next door, and that sold in July 2018 for $4.325. So again, a 19% average annual increase.
Do you reckon there would have been some renos?
Both very livable houses, not original houses. So it's certainly been kept up to date over a period of time, very much kind of late 70s, early 80s
but they're
type
not
houses.
Knockdown, start agains.
That you could live there for a year or two,
No, so they haven't been knocked down.
Haven't been knocked down at this point in time.
There you go. So when you look at those charts of, especially the property spruikers, they try and always compare property to shares and say shares are 11 point something, property is 11 point something since the 50s, right?
Yeah.
And you go, oh yeah, well, what about my house? What about that house? It's always an average. Some are up lower, some are higher. Well, you look at a place like Cottesloe where we are always talking about fundamentals. And again, we understand not the most successful suburb, but let's look at that as the highest potential option that you'd be looking at. Why? Great schools around, next to water, next to public transport, great cafe strips, all those sort of things. So all the fundamentals we talk about, other than probably being close to the city, which isn't really relevant in Cottesloe because you've got everything else. You then look at, well, what can you do with property as a passive hold over the last 25? And this is after the slump, right? And we're making in the sort of 20% per year. That's what happens when you make the right passive investment decision.
Absolutely. So, and then if we lead into sort of fundamentals for our Perth market, as in why would you go and buy? Why is it different? How is next year, 2020, going to be different to 2019? What we have seen is just some little blips on the radar in terms of net migration back into WA. So if you have a look at the state government's stats on net migration, it is just being dominated by natural increase. So last year and the year before, we spent a lot of time with population going backwards, net migration outflow as opposed to inflow. So it's just gone back to
It was just the babies being born that were keeping it above zero, right?
Population increase from net migration is just started to in the positive.
Well, there you go. That's fantastic.
Consumer sentiment is just in the positive at the moment as well. And, these things aren't revolutionary in terms of changing everything tomorrow, but it is a trend that means that we're moving in the right direction. And the other thing is labour force. So really interesting graph that I found on the REWA website of just that full-time employment jumping, and so going upwards whilst the part-time employment going downwards. So you're swapping those jobs around.
The underemployment.
And that the employment market's moving from people that are only part-time employed and therefore not maximising the income they want to make to a more full-time employed status, which means that they've obviously find it easier to get finance and commit to long-term debt and those kinds of things and make big purchase decisions, obviously, and buy a house.
The two factors for me that I think are different about next year compared to this year. One, we don't have an election coming up. Uncertainty always around an election. We don't like elections. Two, we don't have a Royal Banking Commission coming up. Those two things that came double punch, January, February, and then May. You may as well have just been in the Bahamas for the first 6 months of this year, to be honest. When you talk about property and reporting, it was nothing good to say.
No.
So both on a fiscal and monetary policy, that nothing was helping Perth.
No.
Secondly, we've got strong data, and we've put this up on our website before, for example, that the next mining push, I'm not going to call it a boom, but in terms of employment, is 2020 to 2024. That's when all the big upgrade projects and new projects coming through in WA, that's when the construction phase is. That's when the people come in. So it's not a forever game, just like we already know it fell off in 2015 last time, but you recognise where there is that increase in population, which is demand, which is not being kept up with by the extremely shrunk building industry, which will always have a 2-year gap. 2-year lead time to keep up with what's about to happen in terms of that increase in population growth. So,
and we did some quick stats on the top 10 current mining ventures, as in projects that are already underway. There's $20 billion of resource investment happening there across projects like South Flank and Iron Bridge and Kudayeri, I can't say that.
Kudayeri,
so that's BHP, FMG, Rio, all up north, obviously, but that also drops down into some of the lithium projects down south. Greenbushes, which is a really good story.
Bunbury, at least.
$500 million worth of investment down there. So they're really good stories in terms of taking or maintaining and pushing through that employment phase.
Roads as well.
Well, obviously infrastructure investment being promoted last week by federal government and state government on the back of that. Metronet, I think in the last couple of weeks we got Yanship extensions and train stations being announced, those kinds of things. So that infrastructure push is bubbling under. There's plenty of work to come there, and certainly a lot of jobs to come out of there as well.
Well, I looked at the skilled migration visa list last week in my fun reading time. And for anyone out there who's got a friend overseas looking to come to Australia, you can do whatever you want, and you got a job, it seems. You can be a dance teacher, you can be a baker, you can be the list goes on. Bricklayers again. It's quite interesting to see that it's a very broad spectrum of jobs and qualifications. If there is someone needing that position field in WA, have a look.
Yeah, obviously we are looking more affordable too. So if you go to the good old HTW property clock, we are still indicating that we're at the bottom of the market. So that's another factor in terms of saying to people overseas, here you go, look at this. This is where our market's at. Rents are still probably the cheapest they're going to be in a really long period of time in terms of getting into the place. Or if you want to come here and buy a house, it's still really cheap to come in the door and buy a house as well.
Very much so. I'd like to see the state government step up just in the same way, and we'll talk about this in the next few weeks, I guess, the off-the-plan stuff, but in the same way that they done their very smart stamp duty reduction for off-the-plans, I'd like to see them scale back their foreign duty again. It's not like it's costing them anything because no foreign buyers are buying. Yep. So it's not like they're missing out on any money they're currently getting.
Yes.
I'd like to see them scale that back. That will help with backing in a bit of that construction work on the apartment side for off-the-plans. We need Chinese investors.
Yep. Yeah.
There's just not enough money in Perth, and if there is, they're all a bit nervous.
Yep.
So we need that extra push from somewhere, and making us more attractive on a national basis to Southeast Asia, especially with that money, compared to Queensland and Sydney that have always got the buzz, even if it's a bad market. Something like that before we kicked it up to 7%, we always had that competitive advantage.
Yeah, and absolutely. We are looking much more affordable than we ever have before, and I thought we'd probably just single out some suburbs because when I do presentations to bankers
people
and
want
brokers,
that.
they want to know the names of the suburbs.
Here we go. Yeah.
So, and really the angle I'm coming at this from is essentially our valuers on the ground at Heron White out there every day just saying, hey, look, we can see some bargains happening here or some lowest prices in these suburbs. But what I'm trying to demonstrate to the audience here is the value decrease and essentially where the numbers have come from and gone to in terms of saying, look, that is really well priced and this is a time that I should consider buying.
I'm interested to hear, Brent. Not even I've heard this list yet.
So we're off to good old Baldivis to start off with. And the decrease ranges in terms of capital value from the ones that we've analysed here. We've got a small sample size, but $60,000 loss over 4 or 5 years through to $130,000 loss in a 5-year period. And in terms of percentage decreases for those individual properties, it's between 12 and 32% of value across those properties. So what are we talking about in terms of investment number? So the sales prices now within the last few months, $270,000, $370,000. The upper end of the range in there, $455,000, down from over $500,000 in the past. And the other stories there are properties that were either side of $400,000 now selling at $280,000. So it's a substantial decrease in terms of...
You know what the heartbreaking thing about that is, Brendon? That's not, and in most cases, that's not people losing their deposit. That's people losing their deposit and then some.
Yeah. And it's really, really disappointing to be able to have to go through those numbers because it is obviously capital being eroded. Hopefully, we haven't
personal loans from the banks.
Yeah.
At the end of the day, that's what it is.
Yeah,
or bankruptcy, which is what they don't want to do for you.
Yeah.
Banks will do what they can to keep you out of there, but they'll still make sure you got a $50,000 personal loan to pay off.
Yeah. Well, the banks have certainly got a lot better at managing their customers that are in difficulty. So I've had it told to me by a couple of the banks out of their head offices out on the East Coast that if you are in trouble, then you need to go and talk to them first because they do have their own financial counsellors and those types of people that are more than happy to talk to you, and they aren't going to close you up.
It's just not in their interest anymore. They don't need another banking commission because a few people have lost their homes and been made to go bankrupt. It probably costs them less to just put them on a personal loan, to be honest.
Yeah, so and then round to the southeast corridor, just so that we're not victimising Baldivis the whole time, down Byford Way and into Haynes and Camillo. So some samples there where the percentage decreases between 6 and 22%, and those actual numbers aren't as severe as Baldivis. So Byford Way, round capital value of just over $400,000, it's gone down by $30,000. Again, another sample that was up near $500,000, that's now closer to $400,000. Similar examples dropping down to $320,000, and then another one which is Camillo sold at $280,000. So getting back down at that really cheaper end of the marketplace, and again shows that correction isn't just within Baldivis; it's in other locations as well.
It's a whole demographic where we've seen the real correction. If you look at the numbers across the 200 suburbs in Perth, at least the mining that we've done, when you think about how Perth has dropped 20% in the last 5 years, for me, a good portion of that 20% is most of the bottom quartile of suburbs in Perth in terms of prices dropping 30%.
Yep.
Where all the volume is. And then half of Perth dropping 5 to 10% in
Yep.
that time. A lot less than what the people in the media will have you think.
Yes.
And then actually a quarter of suburbs in Perth, at least according to CoreLogic, having grown in the last 5 years. We don't talk a lot about that.
No.
50 of the 200 suburbs in Perth have got values higher now than they were 5 years ago.
Yep. And listeners can probably come to their own conclusions about where they're going to look for something on the back of what we're talking about here in terms of these suburbs. You go to one of these suburbs for potentially your cheapest price or your cheapest investment property or your first home, because that's what you can afford. If you're looking for that longer term investment, maybe you want to be closer to the city, because none of those suburbs are on our stats saying that they've dropped by 30%, as you're
There's a
alluding
reason,
to.
right? There's a real fundamental reason why that FOMO swing has been so heavy in the outer reaches.
Now, the other, we'll just complete our circuit of Perth, but Ellenbrook, Aveley, so again, correction out in that location. And funnily enough, these numbers are really similar to the Baldivis numbers. So when we sit around...
It's the same thing. It's the
it
same demographic.
Similar
it's the
product.
same fundamentals of demand and supply and services. It's just in a different location.
Yeah, and so capital values as low as $260,000 in there, off nearly $400,000. And then some other examples at actually higher values because they're probably in a slightly better location, but properties down from 570 to 470, 575 to 480. So two examples there of dropping 100K in one suburb, and then the most severe one is $155,000 loss over, and it is over a period of 5 years. So, a peak to trough type market cycle, but 535 down to $380,000.
And these are actual sales change outs, right?
So purchased and sold. So it's not us valuing a property again and saying it's gone down. This is literally the market was here in 2014 and it's here 5 years later. Yeah. Yep. And similar again.
Are you going to tell me about Alkimos?
That's where I'm going. I'm around
how
to the
did I
Northwest
know?
Corridor.
Yeah.
We, funnily enough, don't have a saturation of Alkimos examples here. I've got Clarkson, Yanchep, Butler and Banksia Grove. The Butler and Banksia Grove numbers are down from 470 to 350 and 392 to 272. So both down 120 grand respectively there. Again, losses between 10 and 30% in value. Clarkson, some mid to upper tier property at 700k dropping to 630, and then the lower end of the market in there dropping down to 340 from $400,000. So again, some really severe drops there. Yanchep example, it's dropped to 100k over 5 years as well. April 14 to October 2019, $100,000 decrease there.
My message out of all that information, Brendon, would be to people: if you are thinking of buying in these areas for lifestyle reasons, or because you do see value at the bottom of what you perceive to be the bottom of the market in these suburbs, please buy established. Please do not continue to hurt the fundamentals, the relationship of demand and supply in those suburbs by adding more supply to that suburb. We don't need it. That suburb doesn't need more supply. What it needs is people, for a long-term basis, investing their lives in these suburbs and building a community that increases the fundamentals of that community.
Yeah, and obviously, as we talked about with Baldivis, all of these suburbs have got that opportunity there for people to come through and have a look at the established product.
They should really have awesome lifestyle outcomes for the long term.
Yeah, they should. Yeah, absolutely. And, Ellenbrook was constructed on the back of the ideal of a community. Got great parks and great infrastructure there, as most suburbs in Perth do these days. So really it is a case of having a look at what's on the market, what's established. I know that you don't get to choose the colour of the tiles in the kitchen or what the bench tops look like, and it's not bespoke your house.
There's 500 on the market in Baldivis. I'm
there
sure
are
there'll be a
number
colour
on the
for you.
market. Exactly. Yeah. So you should be looking for. And the other thing that maybe you want to think about there is you get to almost choose your neighbours as well, because you can drive down the established streetscape and work out who's looking after their house, who's not looking after their house, whether that's the street that you'd like to live in, and obviously look at the other infrastructure that's there. You might even have some established plants and gardens and those kinds of things that are a benefit that you don't have to obviously do that work after you build the house. Yeah,
very smart. Let's round out this conversation with a chat about what our conversation will hopefully be next year.
Yes. Crystal balls.
Yeah, what's that crystal ball?
Valuers
for
love crystal balls.
2020?
Yeah, we love analysing sales that happened at least a week ago and then telling you what happened last week.
Yep.
Look, it's sitting here. I haven't given too much thought to 2020. Obviously, it's got to be a little bit better than 2019. I get really scared about being too bullish, but I also am an inherently optimistic person, and I think that whatever you're doing in your property portfolio or you're investing or your first home buying, then you need to be out there looking really hard now, because we've got a number of suburbs, and they're probably in those ones that we talked about, that closer ring to Perth, that have already passed their bottom. So if you were thinking that you're going to buy a bargain in an established suburb within Perth, the bargains are finished, and you should go think about buying in straight away. The outer suburbs that we've just been through are a different proposition. So you need to sit there and say, okay, what is my plan here? Am I buying for a 10-year cycle and I'm going to rent it out, or have I got a family member that wants to move in there, or is that my first home buyer market that I'm getting into? And it is, I know my debt I can be in Baldivis for $250,000 to $300,000, and I'm going to concentrate on smashing that debt down or getting as high a rental as possible, and I know that I'll probably get some capital value into the future. So there's some good decisions to be made there. The only other things I'd probably wait for is a little bit, the economists are saying probably 2 more interest rate drops, so you'd be wanting to make sure that you're going to victimise your bank for the cheapest interest rate you can get and set that up for into the future. So that might be the only thing that you maybe wait on. And obviously go and watch the market. If you're interested, start watching now, see how it pans out over summer, be sitting there for 2020 and ready to make some decisions. Yeah.
Start talking to your local real estate agents.
Yep.
They are working really hard right now, and the ones that are working hard and smart are actually still doing really well.
Yeah.
So I would also say, we're at the start of the Christmas period now. So many of us have a lifestyle option these days, or a lifestyle preference to nick off for 2-3 weeks. Most of Perth shuts down over that time. It's a great time to start doing your homework, or to make a quiet buy.
Yep. Yeah. Well, buying when there's less competition is an absolutely fantastic way to do things.
Of buying anything, right? Minimise competition. So naturally, there are less people around to compete with you over that time. If you've been sitting ready to go, getting your pre-approval ready, champing at the bit, I would suggest, and I've suggested personally to a couple of friends of mine, just wait till that week around Christmas and New Year's. You'll find it very interesting how some sellers will actually take a few offers at that point, because no one's been around for a couple of weeks.
Yeah, and they were hoping to sell on the way into Christmas.
Yep. All right, Brendo, we'll have a chat, I reckon, end of first quarter.
Yes.
That will be a good time just to see how long this seeming hopeful increase in confidence and fundamentals comes through. Last year it was a tail between our legs at that point. Let's see if hopefully we've got a bit more. Yeah,
and I think I'll be watching unemployment at that point in time. I think we'll be having an eye on whether those jobs that we've just talked about for infrastructure, for mining, have flowed into the economy.
I'll be watching population
and then
growth.
Population on the back of that, because if those jobs are there and the wages are right, then people are going to start coming from other parts of Australia.
Well, the houses certainly aren't being built, so that's all we need. We're pretty much at that point now where the builders just don't have the people to build them. Even if we came tomorrow with the opportunity, they don't have the capacity. So second we start seeing an increase in that demand side, the population, the wage growth, I think that's a while away.
Yeah.
But second we start seeing an increase in visas coming through, watch out.
Yep. Agree.
Cheers, Trent. Soon, mate.
Thanks, man.
Thank you for listening to another episode of the Perth Property Show. If you've only just joined the conversation, you can catch up by heading over to our website, perthpropertyshow.com.au, subscribing to the podcast, or joining our Facebook page. Don't forget to tune in next Monday at 7 a.m. for more expert insights, local analysis, and suburb spotlights. Happy hunting!